And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Volatility did pick up a little bit last week. We will get into that. And relative to news that drove price action, it was all about employment data. So we did get ADP business employment data on Wednesday, and that did show a surprise increase in new jobs being added. And today we did get the broader employment data, and that also showed an increase in new jobs, also an increase in wages. And as many of you know, the Federal Reserve is very focused on this employment data now. They have shifted a bit away from inflation, and the news today has pushed back the concept that the Fed will raise rates another 0.5 percentage point. So we will take a look at yields, how they responded, as well as group rotation. There were other themes that continued to shape up this week that we've been talking about for the last 2 weeks. They are still seeing a lot by way of momentum, and that's going to be China. And then that CEG deal with Microsoft, who is they're moving toward using nuclear energy to power their need for electricity for their AI efforts. So we'll get into that. From here, let's go ahead and take a look at some of the news next week that you will want to be aware of. We will get core CPI and core PPI data next week. Also on Wednesday, we'll see the notes from the Federal Reserve's latest meeting, and that may be directed as investors are still on the lookout for further guidance relating to that interest rate backdrop. Also last week, we did have news of a strike among dock workers, and that did cause volatility in the beginning of the week. That has been resolved, so that certainly is good news for the markets. As you know, uncertainty does push that volatility higher. So let's go ahead and take a look at those markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. And you can see that volatility earlier in the week. We did manage to end the week back above this 10-day simple moving average. Good news there. We also have a positive RSI and MACD, so that the near-term uptrend in the S&P 500 remains in place. From here, we'll take a quick look at the Nasdaq, which is also back above that 10-day simple moving average, a nice 1% rally today, and those momentum indicators in positive territory. You can see that we had a little more of a difficult time here with the Nasdaq recently due to certainly a pullback in semiconductors and other areas, but a very nice orderly recovery, keeping the uptrend in place there as well. Now, beneath the surface, as always, let's jump on in and take a look at the 11 sectors in the S&P 500. I've gone ahead and added that relative strength indicator. We're sorting the 2-month view of these sectors in descending order. So your relatively stronger areas are up in this left quartile, and then your weaker areas down in this lower area. So first up is utilities, and I talked about that move into energy and most importantly, electricity related stocks. And the utility sector is now the top performing year to date, just a tremendous uptrend, which is continuing to shape up. We can also take a look at a weekly view, and you'll see that we are certainly in an overbought position. We are getting very close to that 80 level on the weekly, but certainly very, very powerful uptrend continuing to take shape in that utilities area. XLC, we are going to take a look at some of the heavier weighted names in this group that help propel this indice or this sector up to a new high in price. Communication services, internet related, is going to be that primary driver. And moving through industrials, this is a continuation rally. We are in a period of breaking out of this nice flat base. We have bullish momentum with that RSI and MACD. A lot of this movement is concerning and around that AI play. We'll talk about that. And then also China's stimulus package, which is really helping some of these global industrial stocks with the concept that China's a renewal of their economy will help globally with growth. So moving through, energy is the top performing this week. This is XLE, and the group was up almost 7%. A lot of this centering around that move into oil due to Middle East conflicts. We did see the price of oil ramp up 10% this week, and you can see the response, but also that China play as far as global needs for oil and energy due to China's potential economic turnaround. So as we move through, let's take a look. Financials were up today, having this group break out of a nice base. This is XLF. Banks certainly were a part of that. And then also insurance stocks continuing to fare well. Also, we can take a look at technology. That's XLK. We talked about that group really having a difficult period, certainly last week and into the beginning of this week, actually, and we can see a nice recovery rally here with technology springing back to life. We'll take a look at some of the areas that are driving that group higher. Unfortunately, healthcare continues to struggle. We can see XLV, that healthcare ETF, and it is now below that 50-day simple moving average, negative RSI, and that MACD now entering into negative territory. As we move closer toward elections, oftentimes you will see some of these healthcare areas get hit. But I will tell you, as we move through, I'll share with you some sub-industry groupings in healthcare. Certainly biotechs would be among them that are not faring that well. In fact, let's go ahead from here and take a look at some of the sub-industry groupings beneath those 11 sectors. And these are using ETFs that are very helpful as far as spotting potential rotation and moves into newer areas. And take a look. We have not seen TNX is the yield on that 10-year, and it's up here front and center. We did close the week at 3.98, very close to 4%. And this is all about sentiment regarding the Fed's monetary policy being reduced relative to that interest rate decline scenario. So keeping a close eye on this, because we are seeing bullish indicators here. And we did see interest rate sensitive areas pull back. Certainly most important there is going to be home builders, and they surprisingly held in fairly well. This is XHB, that S&P Home Builders ETF. It was down about 1% today, but still remains positive with that RSI and MACD. While we do have a rising potential, not rising interest rate, but less of a declining interest rate backdrop, that employment data does speak well to continued strength, certainly among consumers with that wage increase. So you have both areas weighing on that particular group. Let's go ahead and take a look at IGV up here at the forefront. This, of course, is the software ETF, and you can see we had a very sharp, nice recovery. I'll share with you a couple of names in here in this area that are really recovering similar to this pullback and look quite interesting. And also moving through, we will want to take a look. Certainly from my work, I do tend to focus on those higher growth, faster moving stocks, but we did see a nice recovery here in those semiconductors. The pullback earlier in the week here did have something to do with that strike with the dock workers. There was a sense that we could see supply chain issues among those semiconductors, and then also talk in China as far as they're potentially developing their own chips, so they're not as dependent on other companies. That we did see a nice recovery in that semiconductor group. Let's go ahead and take a look here at volatility. I talked about it moving higher, so that we did close the week at 19. So Anything above 18 on that volatility index is viewed as suspect. So we will want to keep an eye on that, although today we kind of settled in with a little bit of a negative momentum here on that RSI. We did dip into positive territory with that MACD. Nothing like this explosive move taking place in late July into early August, all about that Japanese yen trade, but certainly worth noting. Let's go ahead and take a look at some of these other areas. I talked about bank stocks being on the move higher. This is regional banks, KRE, up 2% today, has not reversed its downtrend. You can see the momentum is still heading somewhat lower. We do have banks due to report their earnings. First up will be Citigroup in about 10 days, about a week and a half from now. So that's going to kick off earnings season. We did see a nice rally today in small cap stocks, IWM, the Russell 2000, and a bit of a recovery here in these smaller stocks. Some of that is going to be bank related. One of the other outperformers today with the relatively, or certainly unsurprising employment data is XRT, the fact that consumers could conceivably have more disposable income. And you can see this is that retail ETF. It was up almost 2.5%. There were certainly some bright spots in there. We'll take a look at a couple of names there as well. So from here, I did talk about healthcare. IBB is that biotech ETF. You can see it's found life below that sideways trending 50-day simple moving average, generally negative bias and momentum there. I do want to share with you a look at the M7 stocks. They did have a mixed performance last week, the Magnificent Seven names. I'm going to expand this chart a bit. And what I want to share with you is a view. And what you can do is when you put a list together, such as now it's still called FANG, but I've added NVIDIA. And what I do want to share with you is that you can ask for different views of your given list. So what I'm going to do is ask for a candle glance view, and then sort it by that RSI in descending. And you also have many choices here as well using stochastics. You can also use MACD and any number of other indicators. But what I did want to share with you are some of these moves and some of the areas among these big mega cap names that are up here at the forefront relative to your underperformers. Meta Platforms is a name. It's on my MEM Edge report, and you can see the sharp advance. The stock was up over 4% this week relative to the S&P, which was mostly flat. And I did want to, from here, go ahead and add that 5-day simple moving average and see how that particular new key moving average can act as your area of potential support during periods of strength and uptrends. So with Meta's rally last week, we are having an RSI up here at 79. I would not pile in at this time, but it is worth noting that among these mega cap names and AI names, Meta is really showing its hand as a leader. Also up here, Google or Alphabet, and we can take a quick look as it is in the beginning stages of reversing this lengthy downtrend. You can see we're now back above that 200-day, that 50-day. We now currently have a bullish MACD coupled with an RSI that turned positive when Alphabet moved back above this key 50-day simple moving average. These companies are due to report in a little more than 2 weeks' time. As we move through, you will note that Microsoft is continuing to struggle. You can see that it is finding support at that 200-day simple moving average with a negative MACD and a negative RSI. So not all is well among these names. Last name up, we'll take a look at Tesla, which sold off sharply earlier in the week due to sales numbers or car delivery numbers that were weaker than expected. But take a look, found support at that upward trending 21-day simple moving average. The RSI did not get into negative territory, and we are seeing a bounce. A close above that 10-day would put Tesla into a nice buy range. So from here, I did mention to you that we're going to take a look at some of the other areas this week that continued to advance. Now, I did talk 2 weeks ago about Microsoft's deal with Constellation Energy, and they are looking to revitalize the 3 Mile Island nuclear. And it really, at that time, I talked about that nuclear renaissance that Morgan Stanley has been talking about, and it's continuing to have legs. Here's that gap up on that Microsoft news as far as utilizing CEG for their nuclear power. And we can see this 5-day simple moving average. We are stretched. RSI now back up here above 83, but certainly a lot of relative outperformance in this area. From here, we can take a look at a couple of other names that are also AI related. I will tell you, having done a number of screens looking at what was really moving a lot last week, and it was a lot of AI related stocks, and energy being among them. We can also take a look at GEV. This is the General Electric company, and it is GE Verona. We're looking here at a daily price chart, and today's 4% rally pushed GEV out of a 1+ week base on nice high volume. And this particular company does provide natural gas power generation equipment. So you're seeing a move into some of these energy related with AI. Also, pipeline stocks on the move. This is Kinder Morgan, KMI. You can see that we had this lengthy base breakout prior and then a sharp advance today. So any number of these pipeline stocks are looking interesting. GLNG is another company, a particular group. Let's take a look at a nuclear startup. And this particular company is backed by Sam Altman, who is the chief over at OpenAI. So AKLO is the ticker symbol. Really a startup. You have to know that it's going to be quite volatile. In fact, looking at it, I did not realize it was up 18% today, but this again really exemplifies that move into these AI driven type of power generators. OKLO is a nuclear startup. So that is one area in that AI related area that worked last week. Let's take a look at some of these other well-known AI related names, really to again confirm that that was an area of strength last week. This is Palantir, PLTR, and we did have a nice base breakout on Thursday of this nice 1.5 week base, which in turn pushed that black line up through the red on the MACD, signaling a new uptrend. Another well-known name we'll take a look at that came out with strong results recently, and a lot of it AI driven, and that is Oracle. Here's that gap up on earnings, a sharp run up. This is top on my watch list. Rather than chase the stock, you can see the RSI did get up above 80 here. On the lookout for this orderly period of consolidation, which we've seen over the last 3 weeks, and then at some point in time, a continuation rally out of that. Another well-known name in AI really fell out of favor, but conceivably could be coming back on. That is Dell, DELL. They are well known for their servers that are needed in generating AI data. Taking a look here, we did reverse back above that 10-day simple moving average, got that RSI back in positive territory. Likewise with that MACD. Just really keeping an eye on that with my watch list. A German company with an ADR that we can take a look at is Siemens, and it is SIEGY. The stock had a really sharp advance, another AI-related power company. They do supply power generation systems. Nice pullback here to this 10-day simple moving average, and then a subsequent gap up. So when talking about potentially buying on that pullback. We talked about XLE. It's not an area that I am favoring now, but there are certainly two names that I can share with you that are looking quite exceptional. I did look at the energy group and did a screen asking for names that are above their 50-day simple moving average, and it's a very thin list. Certainly Exxon is one of them. XOM, I would argue it is the leader in that energy space. We can take a look. I'll go ahead and mark this chart up and share with you the fact that we are coming out of a very lengthy base period, taking us back to the beginning of April. And here we are with that nice base breakout, nice high volume characteristics. Here we are with the volume down here. And then we did get that MACD crossover back here, indicating a new uptrend. Now we are in positive territory after last week's price action. Again, another area that I did want to share with you was names in that software space. And IGV was that ETF, certainly the one that I use when keeping on top of price action in the software group overall. There are over 300 names in the group. I'm going to share with you a couple of names that are on the move and are a little bit earlier in their advance. Now, we did look at Palantir. That's a clear-cut leadership name in the software space. But for those that are more inclined toward downtrend reversals, just sharing with you here that Datadog DDOG, now you can see it is an overly volatile name, but it has had its moment in the sun where Wall Street really has gotten behind the stock. Today's sharp rally pushed DDOG back up above that 200-day simple moving average, bullish RSI, and the MACD now in positive territory. Let's take a look at a couple of other names here. Another leadership name, I talked about Palantir, that did pull back, and that's ServiceNow. I'm going to go ahead and pull up a weekly. This is a stock that has been on my MEM Edge report in prior periods because it has that predisposition of outperforming once the stock gets going. So what we can see here is a sharp advance to a new high, orderly pullback, and then we did close today back above that 10-day simple moving average. So constructive, interesting price movement there. Another stock that we can take a look at is DOCU in the software space. Docusign had a nice cup with handle base breakout here today, gap up about 1.5%, pretty decent volume, not easy to see there. And then last up, we'll take a look at FTNT. And this particular stock has been in a period of consolidation. It is a software security stock, which is generally quite strong within the software industry grouping. And we are in a lengthy period of a back and fill base building formation, on the lookout for a move above this recent high. And if we can marry that with a MACD crossover, we could be in for another leg up with FTNT. And that's it for this week. As a reminder, we did get relatively strong employment data last week, which is pushing back that hope that the Federal Reserve will be aggressive with their rate cutting. And in turn, we did see a move into select areas, while interest rate sensitive areas were somewhat impacted as well. Next week, we will get key inflation data as well as the FOMC meeting notes. And of note is a continuation rally into AI-related stocks. That's it for this week. Have a fantastic weekend. I'll look for you here again next Friday.